want to confirm where the timekeeper would be? Just up front here? Just the
Yes, I'll be right here.
Okay, great. Thank you.
Okay, well, good afternoon, Brian, Shannon, Mark, and esteemed AMCO executives. We'd like to begin today by stressing 3 pillars, which, for a continuously growing company like yours, is foundationally imperative to its future success and growth. The first pillar is innovation and ingenuity. And this means providing services and products that leverage AMCO's stellar reputation and providing services that are ultimately cutting edge to the customer. Good afternoon, my name is Kevin.
The second pillar is sustainable business processes. And we define this as practices that your company goes through day in and day out, year in and year out for that long-term growth. Hi, I'm Jason.
Third pillar is ethical decision making. This means that for all your future business endeavors, you'll adhere to your very strong core values to be able to provide your customers the best service and the best products. Hi, my name is Nick.
We are the Omega Consulting Group, and we're very happy to be here today to guide you through the process of setting a foundation upon these 3 pillars for future success at AMCO. Our discussion, as you can see here, is separated into 6 key sections, at the conclusion of which we'll open the floor to your questions. But let's begin today by looking at a snapshot of the discussion. Currently, AMCO is a leading distributor of products in the construction industry, and it's looking for the new growth opportunities. We've identified 3 issues moving forward that may encumber your growth into the future. And the primary issue is the need to respond to new customer trends, particularly within the online space. The secondary issues is number 1, the decision of whether or not to support foreign products, and this involves the trade-off between domestic quality and foreign margins. And the second secondary issue is the relationship with US manufacturers and a need to create a value proposition in light of the fact that they want to bypass some elements of this current supply chain. Our Omega solution will overcome these 3 issues and create a lasting impact for AMCO, enabling it to capture its growth opportunities to maintain its leadership position with regards to product quality and service. Now at this point you might be wondering, well, what's this great Omega solution? And we're really excited to present it to you right now, so let's break the suspense. The Omega solution is to maintain growth year over year by capitalizing on online market trends with m-commerce. And we'll explain that a little bit later. And by creating barriers to entry from your foreign and US manufacturers. Now, with that in mind, let's take a step back and understand our process to get to that solution. And next is going to start things off with the problem ID.
Thank you, Kevin. To begin, I'd like to highlight that you have identified several issues that we need to take into consideration for. But we'd like you to keep in mind that the state of the economy, although it's not an issue, it's something that is considered by all 3 of our issues and analysis. To begin with, the primary issue. This is the most important point of your company that needs to be addressed. What this means is that the customer purchasing trends are moving towards online purchasing decisions in the construction industry. And things that you need to consider as a company is, first being that the customers for these online websites are providing these types of 10 to 20% discount rates, but then these are actually a lot less in terms of equivalency. It's relatively similar at the end price after there's shipping and also handling incurred in this cost. Then there is the blind shipping, which allows for increased revenues for your different customers. But what this means is that you will actually be able to have this type of revenue, but your branding will not be passed on to the actual end user because they'll be thinking that they're purchasing from this online website. Lastly is the decline in the Canadian construction market, and this proves to be able to allow you to actually ship more internationally, which could be a potential opportunity for you. And this is opportunities that we have identified, the first being to provide an interactive online product demonstration, which means live demonstrations of all the different products that you have. Secondly is blind shipping for the United States website company that have approached you for a quote. This is an avenue for growth that you can consider definitely. And lastly, shipping more products internationally, as I had previously mentioned. Now touching on our first secondary issue, this means that there is foreign products that is increasing in popularity and also in visibility in the Canadian market. Key considerations to keep in mind is that carrying these foreign products is inconsistent with your vision of providing the highest customer service and satisfaction because there is an inconsistency in the product quality in these foreign products. Secondly, the current suppliers that you have right now domestically may not be happy if you're purchasing or carrying products that overlap with what they have already existed. So opportunities that we have identified is to focus on driving these sales of domestic products, and to be able to do this by focusing more on the volume aspect, which will be able to allow your growth in terms of having more profit centers all over the country, and to expand these profit centers so that you can have additional ones in many different areas and regions. The last secondary issue is the growing tensions between the US manufacturers and also wholesalers in Canada. Now, what this means is that you need to keep in mind that the end users will need to contact many manufacturers if this disruption in the supply chain will happen. If you take away the distributor, there will be many manufacturers that will be dealing with your customers, and that proves to be a very strenuous process for your customers. Secondly, these US manufacturers are a key component of your overall business right now. It's very important to maintain this relationship for your future growth and also your future businesses. Lastly, the Canadian product specifications need to be understood by all of your suppliers and manufacturers, because this means that they'll be actually able to be entered into the Canadian market, whereas there may be barriers if they don't meet Canadian specifications. So a couple of opportunities that we have identified through analysis is that creating this value proposition to your US manufacturers so that they understand the importance of having a distributor, particularly in Canada, to be able to carry their products, and also creating these barriers to entries for foreign manufacturers. So with that in mind, let's dig a little bit deeper into the finer details of the analysis of things that really impact your company. Your company right now focuses on having 6 regional offices in terms of having 3 for plumbing and 3 for HVACs, or sorry, 3 in the east and 3 in the west. And also, you have 2 nationals in terms of having 1 for industrial and 1 for waterworks. These are the key components of your business and the key customer aspects of your different business segments. What we'd like to point out right here is that your profit centers are able to actually specifically tailor your ordering processes because you have over 200 branches across Canada in many different regions. These branches are able to personally adhere and keep up with any of your customers' specific requests so that they're actually able to meet the demands and make their buying process as efficient as possible. Second, we're going to go into a little discussion about the industry. Now, the industry, we're considering that you are looking into these potential foreign markets. Now, these potential foreign markets we have identified as having higher margins, although they have a little bit of a lower quality, right? And there are also your domestic suppliers that you currently have. We have identified several key criteria that we need to take into consideration when you're considering these 2 consumer aspects. The first being the overall customer experience. What this means is that being able to provide the total customer satisfaction that your company holds so strongly. And we've identified that focusing on your domestic partners, you'll be able to maintain this upkeep of providing the exceptional customer service and the maintenance, as well as the warranties that you'll be able to provide with your domestic customers. Second is quality control. With this in mind, your domestic products are a lot higher in quality in comparison with the foreign products because of the quality control issues in foreign markets. Thirdly, volume sales. The foreign market does prove to have a high potential for volume sales because you're able to price it more competitively at a higher price to make this different margin. But the volume sales will be able to drive up in numbers because of the potential for it. And also margins, as it has been indicated to us that these foreign products do have much higher margins for sales as compared to your domestic products. The key takeaway that we'd like to point out for you to remember is that sourcing the products from your foreign suppliers will be in conflict with your company's vision of providing this total customer satisfaction, which if you do carry these foreign products, they will conflict with your core values in terms of not being able to provide this quality control. Lastly is a look at the organizational analysis. What I would like to point out is that the importance of your company as an organization within the supply chain. For example, there are 3 manufacturers, and these manufacturers will be dealing with your company as a distributor on a personal level. Your company, EMCO, is able to provide many key things. Some include product specifications and also marketing, having many different branches all across Canada, meeting the pricing needs of the end users, your product variety, as well as these customer relationships. And what this means is that the manufacturers will be funneling into your company, and then you'll be delivering this product and service to your customers. If you take your company out of the equation, the customers will have to deal with many different manufacturers because they will not have all the products that they would like compared to having a distributor like yourself. With that in mind, I'll now pass it off to Jason to discuss some of the alternatives that we have identified.
Thanks, Nick. So as Kevin alluded to earlier, our strategy has a lot of different components. But what I want to start off with is our alternatives for the reason we're here today, and that is to respond to those customer trends. Now I want to walk you through our decision criteria when we made this decision, so starting off with those sustainable business practices. We wanted to create a strategy for you today that has these long-term benefits, that isn't just a 1-year or a 2-year plan, but enables MCO to continue its growth many years down the road. The second is innovation and ingenuity. Why is MCO number one? Because they're always on these market trends, they're always innovative, and they're always on the cutting edge of what needs to be done next. And lastly, ethical business practices. As you mentioned several times in your core values, it's very important for you to align these values with any strategy that you implement in your company, and we consider that moving forward. Now the 3 alternatives that we feel are the best way to go in terms of e-commerce online. First and foremost is blind shipping. As you mentioned, you have been addressed an offer where you can have blind shipping, which essentially you ship out your items with a third party, however there is no branding done by yourself. The second one is through m-commerce. So we basically want you to redesign e-commerce for the construction company. We want you to brand this as m-commerce. You're changing it, it is innovative, it is the next big thing. And lastly, you can decide not to go with online sales and go with just more online presence because you find that more traffic is being on your website, such as your Westland website, which you recently remade. It's important to revamp all your other business lines as well. Now, once we've gone through our decision criteria, we decided that the blind shipping scored the highest. And the reason this scored highest than m-commerce was because it can be implemented in a very short amount of time. M-commerce is something that we recommend you adjust in a long period. However, in order to create a website that has that high quality service you can get at an MCO showroom, however online, it's going to take some time. And you want to be on that innovative cusp, you want to be the first market leader. Therefore, you want to start off with blind shipping and move into the m-commerce segment as time goes on. So on behalf of the Omega Consulting Group, it is my pleasure, and I'm very excited today to present to you our Omega solution. So when we had this discussion of how we're going to come up with this strategy, we wanted to identify the key issues and then address them head on. So for the primary issue, as I mentioned, the online distribution, you want to start with blind shipping. And the best part about this is you have an early entrance to the market, and you're creating a barrier to entry for your other competitors. Because this US developer wanted to make it with them, however you outbid them to get this new blind shipping service, you're creating that barrier to entry and being the first one to market. In the long term, we want you to move into m-commerce. However, something you can implement in the short term, as Nick mentioned, is an interactive showroom. Now, who goes to your showrooms? You have contractors and you have designers. But what they want to do is they want to also be able to have these options online. So by having a virtual showroom that they can look, change the colors in, and see what things are available, they can really see what options are available. And this is on the cutting edge of technology as well. And lastly, as I mentioned, m-commerce, developing your own internal site where this is very possible. You have the expertise and the capabilities already to produce this. As I mentioned, you recently revamped your Westland website to make it more consistent with your other brands as well, and it turned out great. And we're very confident that with the experience that you have here on the MCO executive staff, that this would be very possible in your future. The second component was defending those domestic products. First and foremost, as Nick mentioned, is your sales by volume. Something that came up in our discussion was that your management development program is second to none. You have the great leaders of tomorrow, and you're able to create these profit centers. And that's what's stopping you right now. If you had more profit centers, as you mentioned, you would have more profits and more volume of sales, which is what you want you to focus on, as opposed to larger margins and the lesser quality of the foreign products. The second one is direct comparisons. We want you to have on your websites the pricing of your competitors. Now you might wonder why you want to do this. Well, your US competitors, although they are priced less, once you add in shipping and handling costs, your pricing is actually a lot more competitive, as well as your delivery date. Something MCO does very well is there's an outstanding distribution system where your competitors also lack. Last but not least, product and service excellence. As Nick mentioned, I just want to reiterate, your domestic products have a higher quality, you're able to provide a better service to your customers, and that is what MCO is all about, the best products and the best customer service for that market. And the last component of our strategy today is the value proposition system. As you mentioned, your US manufacturers are looking to disrupt that supply chain. So how do you prevent that from happening? Well, you create values for them to stay put. The first one you want to do is by creating marketing services. As you mentioned, showcasing their items in your online showroom as well as your current showrooms. The second point being your outstanding customer service. By pushing these objects and supplies outside in these showrooms, you're able to really sell them better than the manufacturer will be able to do from their distribution network. And the clients that you have as well there's a reason you're the #1 in Canada for these multiple business lines. The value proposition that you get is to retain that market share moving forward. And for your customers is to maintain that strong customer service. And as well as, for example, in the lower mainland, you're never more than 15 minutes away from an MCO location, which is something that those US manufacturers can't do by entering this market. So with that said, that's an overall view of our strategy today. I'll now pass it off to Kevin, who will show you how this concept of our strategy will be brought to life.
Thank you, Jason. Given our Omega solution, it might seem that there are a lot of moving gears and pieces of this strategy, and with any strategy being implemented into an organization of your size, it's going to take time. But let me reassure you at this point that we're going to take you through this step by step, from when you leave this meeting to a week from now and years down the road. And it really begins with entering into a blind shipping contract with that blind shipper. What you want to do here is codify some certain terms, specifically your ability to pack branded materials and also the shipment terms. So what this means is that MCO is able to pack in a branded material that simply states that it was packed by MCO, and if there needs to be any additional service, they can go to that MCO website. And also shipment. Something that's key is the customer quality experience. So to make sure that you have some sort of agreed shipper that can deliver that level of quality is highly imperative. We want this to be led particularly by Mark and the National Support Center, particularly because this is an area of legal expertise. Secondly, you want to look at identifying areas for profit center growth. Historically, you've done this either organically or through acquisition, and this is no different. What we would like you to do is to look at growing your profit centers by 10% in each of your 8 regions. What we would like for this to be is to be led by Brian, the current VP of HVAC and Plumbing. And in order to do this, you're going to need some managers for those profit centers. So what we would recommend is increasing the hires from the management development program. You have an excellent program in place. You're able to develop that, identify that top talent. So look forward to expanding that program. Finally, within the short term, you want to look at creating contracts with the US manufacturers. So this would entail codifying those volume discounts due to some of the benefits that Jason just identified from the value proposition to those US manufacturers who are currently looking to bypass that supply chain. We would like this to be led by Shannon and the National Procurement Team, as this would be an area for their expertise with regards to negotiating those supplier discounts. Within the long term, you want to look at developing and launching m-commerce. So this involves hiring a web development consultant and focusing on the showroom experience, as Jason just identified before. You also want to look at regularly updating the website. This is something that should happen across the years. Focused are led by the NSC and price quotes from competition. You also want to look at possibly integrating this m-commerce into other business lines. Let's discuss some of the major impacts this is going to leave on your company. Beginning financially, we project that your market capture will be 3%, and your contract size about $600,000, and you'll have a marketing budget of about $2 billion. As you can see, you'll generate about $3 billion in incremental revenues, and that is the breakdown of the budget, which we can discuss a little more in Q&A. Now, with any strategies, there are benefits, as Jason identified, but there are also risks. So the first risk we identified is there might be overlap of foreign products. Here you want to look at potentially acquiring a foreign manufacturer to have control over the product quality as well as product knowledge. Another risk is that US manufacturers may set up their distribution centers in Canada. Here, you want to focus on the fact that you have 400,000 SKUs to sell in lieu of this, so you can focus on that. And finally, blind services might be unwilling to accept pack-ins. And here you want to continue with the blind shipping because it does offer benefits and knowledge into the online space. Now, we started today identifying 3 issues and how our Omega solution will create a result where you're able to capture your growth opportunities. But what does this actually look like? Well, we'd like to take you back to those 3 pillars that we started off with today. From an innovation perspective, it means becoming an early adopter in the online space within the North American construction industry.
From a sustainable business perspective, it means capitalizing on that market trend and capturing that market potential.
From an ethical decision-making standpoint, this means providing the best practices and the best services while adhering to your core values for your customers.
And these 3 pillars, ladies and gentlemen, these pillars will form the foundation upon which EMCO will build its very own lasting impact. Thank you very much for your time. We'll now open the floor to questions.
The blind shipping option, you indicated that each shipment would go out with a note that said packed by MCO. Is that realistic if our main competitor in the US is running this site? Don't they want the shipment to come from them? Do they really want the customer to know that it was packed by MCO?
Because this is being packed at the central distribution, this is a benefit that you have. However, if they're very reluctant to it, we feel that you should still go forward with this initiative because you are entering this online market. You're able to see what the growth potential of that is for when you launch your M-commerce initiative.
And you're suggesting a central warehouse or a profit center by profit center shipping?
For your online sales, we would suggest a central warehouse, simply because of the fact that currently your profit center managers really feel that they're in control of their own fate. It's really entrepreneurial and that their profits are driven by their sales. Now, something that is online isn't controlled at a profit center level. So because of that, we want to remove that disconnect and ensure that by distributing it centrally, that this conflict doesn't occur.
If you're doing it centrally like that, again, how do you go about allocating those profits that will be generated from the, obviously, the e-commerce site to each specific profit center?
Well, a great way to do it is simply the fact that overall online sales is going to increase the whole pie. So really, the profit center should basically receive an equal portion of the pie, and that would be a great way to do it. But other than that, you could look at what the current percentage between each profit center in terms of how much revenues they generate, and then simply just allocating it on that same percentage based on the same split of the pie.
You're advocating that no foreign products be entertained. In the business of being essentially a wholesaler, is there a danger of local manufacturers, US manufacturers collapsing, they're not having those relationships internationally?
Sorry, do you mind clarifying your question? Is it asking whether or not if the US manufacturers collapse, what we would do? Or what your company would
If
do?
you've got no overseas relationships with any foreign manufacturers?
Right, well, as you had mentioned, your company has many different manufacturers and suppliers that you deal with, and we feel that you're able to be carrying different lines of products for all your product segments, that you'll be able to rely on your other contracts with your other manufacturers and your suppliers to be able to mitigate this risk of if a certain US manufacturer were to collapse or a certain international manufacturer were to collapse.
So it suggests there is no value in finding quality foreign products.
That's something that we wanted to address a little bit more in our risk mitigation. And currently, with the information that you provided and the analysis that you have, we recognize that MCO is not a risk-adverse company. You're willing to take risks. However, the 2 foundations of your company are the customer service and the product quality. And at this time, neither of those are currently there. And until those are present, we recommend that you wouldn't go foreign. As Kevin mentioned, a mitigation of that would be a potential acquisition where you can control those. However, at this time, it would be irresponsible of us as your consultants to recommend that strategy.
If we're assisting a competitor in setting up in Canada a new web ordering system, new e-commerce site, isn't there a risk of cannibalization of our existing sales? So yes, you get a smaller dollar percentage for each shipment, but you may actually be losing money in the long term.
I'm sorry, just to clarify, which segment would you be losing the profits from?
If they're taking orders from our existing profit centers.
Right. So as Kevin mentioned earlier, something your company does very well is profit sharing plan and the bonuses that are allocated towards each profit center. Therefore, if you are receiving a lot of orders that originally came from a client that you can track was from one of your smaller profit centers, you'll be able to distribute that as a percentage greater to that profit center from the other ones.
Sorry, I don't think I asked my question properly. If for the blind shipping portion, so the majority of the profits are going to another company, so you're actually reducing your profits per order, right, by taking sales from MCO and moving them to a competitor.
Oh, right, sorry. What we want to do there is, the reason you want to go into blind shipping, first and foremost, is to gain the market. So what is online shipping for this construction industry look like? And the second, it creates a barrier to entry from your competitors. So if you don't take this initiative, your competitor will, and it leaves the door open for them to gain that leadership. where you could have previously had.
So you're basically saying though, short term, once short term is over, you're basically, once the contract with blind shipping is expired, you won't obviously negotiate sort of longer terms, especially if you have the ability to, you know, do this ship by MCO branding. You know, if you're able to negotiate a contract where you're able to get your brand out there, I mean, don't you think that you want to just keep doing this whole blind shipping, because I mean, you're still getting branded, right, you're getting your.
Ideally, yes, but as you mentioned, the margins are small,
Sorry,
therefore.
that's the end of the question and answer period. Thank you.